when the specificity of the answer is critical and matters a ton. And so being wrong 2% of the time is not okay, like accounting or taxes, like financial services with a heavy regulatory compliance aspect, or in the life sciences or biotech realm. That I think that's where we look for the best use cases for vertical AI.
Nick, welcome to Austin Next.
Hey, thanks for having me, Jason. Excited to be here.
I'm glad we could finally kind of actually get this, done and recorded, because we've been talking about it for a while. And now that you're out of stealth and for the whole world, it's a great time to chat about it.
Yeah, I'm excited we're finally able to do it, and appreciate you having me on, and excited to chat with you and the audience here today.
All right, so let's start off. TipTop, what's the thesis? Where are you investing? Stage, check size, all the good stuff.
Yeah, for sure. So TipTop VC, that's a new early stage venture fund investing at the pre-seed and seed stage, specifically in vertical market software and vertical AI, leveraging my background as a vertical SaaS CMO and founding team member, and then building an LP collective of other vertical SaaS founders, execs, and VCs who have had success as well. We write collaborative checks of 100 to 400K alongside other leading investors, investing primarily in the US, although we did reserve 10 to 20% of the fund to opportunistically invest in LATAM and the EU. And I am based here in Austin.
So let's get purely like definitional for a second. How are you defining, vertical software and vertical AI?
Yeah, so I think it's a pretty tough term these days. I think vertical AI is
all the
generic.
terms move on a constant basis. Like, don't get me started on AGI.
Yeah, well said. Yeah, AGI is another one for sure. But I think vertical AI is almost becoming a catch-all term, and the definition is changing day by day, week by week. Generally speaking, the way I like to look at it is it's AI that's designed and optimized for a specific industry, as opposed to generic horizontal or general purpose AI like a chatbot. So basically AI that's tailored to address kind of the unique challenges, data requirements of a particular industry, such as like healthcare, or manufacturing, or legal. And by focusing on these specific industries or specific verticals, then these AI solutions can deliver better, more efficient, more precise, more relevant outcomes that can incorporate a lot of this industry specific knowledge, the industry specific workflows, and the requirement or the compliance requirements and such of that specific industry, versus a general horizontal AI or chatbot that isn't going to be trained on that specific industry.
Where do you think the line is for when you need like just the horizontal, we'll call it lightly trained? We can use ChatGPT or just, even as a consumer, like train it a little bit to kind of post-training to get where you want, versus the purely dedicated, this is set for, like, how do we think about it from use case perspective versus just generalized, like this is continuing to grow and I can throw in my diagnostics into ChatGPT and get some interesting answers, same with Grok, et cetera?
Yeah, I think it matters most, particularly in two areas, when the specificity of the answer is critical and matters a ton. And so being wrong 2% of the time is not okay. Think things like accounting or taxes, or industries like financial services with a heavy regulatory compliance aspect, or in the life sciences or biotech realm that you live in, or the med device space that I used to live in. And so in these areas where specificity matters, where regulatory compliance matters, where slight hallucinations are going to have large negative impacts, I think that's where we look for the best use cases for vertical AI versus the horizontal solutions out there.
It's an interesting from a compliance perspective. I get the 2% off. Like, okay, if you give me the generalized good enough, go left or right or this, but if I got to go like 44.4 degrees, and that makes sense. From a regulatory perspective, I got two questions. So one is, I asked the question, I think broadly that hallucinations might be a more temporary thing than necessarily a long-term, whether it be because we'll move off of, and anybody who's more technical, I'm sure you're going to hit me on this, move off of like diffusion models, right? And changing to something, whatever the next thing is, that might be one. And then at the same time, like from the regulatory side, are we not causing a lack of innovation when having this kind of compliance set, and now maybe the vertical AI is some way to solve that and speed it up. But we have this extraordinarily kind of regulatory apparatus for health, fintech, things of that nature, and that's actually, I've seen that been actually stifling to these types of companies.
Yeah, fair enough. Well, let's just use the example that I know well, the med device space, the med tech realm, and regulatory compliance. And so if you think about an entrepreneur or a founder bringing a new med device to market, they're going to have to go to market likely in multiple geos. And so they'll go to market in the US, they'll go in the EU, they may go in Canada, they may go in South America, they may go in Brazil. And each of those areas are going to have different regulatory requirements that are often changing on a pretty regular basis. And the belief that a general purpose AGI type solution is going to be consistently updated and up to date with those changing regulations at all times, that's just not a risk that most business owners are going to be willing to take. And so it's a great example of using kind of this combo of public, private, and proprietary data to train your own unique model on top of the LLMs. And so these industry specific fine-tuned models, I think is where a lot of the value is going to accrue. And when I think about like Sam Altman making the statement that if ChatGPT or the models getting better is a negative or scares you for your business, then that's not a great thing. Well, we agree with that as well, but we believe that there's nothing that's going to replace domain specific knowledge. And so if you're using AI in areas where there needs to still be domain specific knowledge, that's where you're going to have a leg up and you're still going to be able to have vertical AI. The other thing that I'll add is that it's not just the AI, and I think we'll get into this a little bit later in the conversation around SaaS versus AI and workflows versus agents, that the best vertical AI companies, which I would call vertical AI software companies, aren't just completing the work or aren't just chatbots, but they're actually building workflows and data integrations and connections to other systems as well. And those are typically generally unique to a specific industry that you're going to need to connect into. And not seeing the broad horizontal players going to be able to go as deep and specific as you need to in these more specific industries.
Well, and it's funny as you make sense, because when you talk about vertical SaaS, in SaaS in some ways has just become a term for I think software as a whole. I mean, even in some cases, it's going under software, even though it's not SaaS. And it's a business model. And the same thing, like you would see, I mean, if you're not utilizing AI in some way at your startup, like that's a broader problem. Whether you were just internally or it's AI first, like that may be the more question of is it AI first or is it an augment? And when to your point, like vertical AI software, you mean just like vertical software companies, like we should be getting to the point that AI is dropped. And it's like, okay, for this use case that we're building, we need we need very traditional software. This we need an AI workflow. This we need an agent. And it's really, how are we solving these particular use cases?
Yeah, totally. 100% agree.
So where do you see is interesting? Like, I don't know if you saw, like the FDA just announced they kind of have a new head of AI, and they want to be incorporating AI more into, this is on their side, into the workflows, which is fantastic. Because I'll never forget that there was a podcast between Vijay Pandey from A16Z and Amy Abernathy. And if you wanted to be depressed, you would listen to that. We could talk about like all the ways the FDA is not prepared for AI on both the incoming, this was I think maybe 2 years ago, the incoming onslaught of AI types of things, and of course just the backlog and the way they weren't. So it's an interesting, because we think about these highly regulated environments, as you say, like manufacturing, financial services, health tech, but is then GovTech almost itself becoming a disruptive sport? Because like, hey, you could actually do this faster. Like I'm waiting for this, like press one button and out comes the FDA application, and then the FDA
Mm-hmm.
just ingests that, rather than why are
Mm-hmm.
people spending months and months essentially collating?
Totally, 100%. I think there's a huge opportunity in GovTech and building tools and solutions for the government to use to improve and make their internal processes better and more efficient. Um, I think it's exciting that you see the initiative going on with Doge and what's happening in the government and their major initiative to modernize and be innovative and run like a more like a modern company or like a startup than the government. And I think as we're seeing, there's just massive opportunities, and so there means there's likely massive opportunities for solutions, tools, platforms, new ways of doing things. And I think it's encouraging to hear that you have people like the FDA or FDA hiring ahead of AI to look at their internal processes to update and modernize and to understand that they are laggards. And I think that this is a pattern that we're seeing across industries. With you would consider the government kind of a traditional laggard industry. I think you would consider health tech or legal tech, manufacturing, all laggard industries as well. And what's been different with this technology wave and in the era of AI is that a lot of these legacy industries are actually becoming early adopters of the technology that missed out on the SaaS or the cloud wave and are now able to adopt a lot of these technologies to run their businesses better, run their departments better.
So one of the things in vertical AI that you were saying earlier was the importance of like domain expertise. But one of the things I'm thinking about now, though, is I describe almost AI as like superpowers, and they're giving these people superpowers, and that there's an interesting disruption that's going on, and maybe we'll get into a little bit, like in the apprentice-oriented fields, see like law firms, where it's like, oh,
Mm-hmm.
they're all adopting AI, but it's doing the work that the first years used to do because it was essentially grunt work, right? They weren't actually learning; they almost paid their dues more than learning. And so the question then is, with these the evolution of these domain expertise vertical companies empowering people, is it possible for these kind of new companies to come out of kind of from adjacencies, like, oh, I see I'm not deep expertise in manufacturing and in law, but I see these issues occurring and I can apply other domain expertise? Or are we purely limited to the insiders?
Yeah, I think the question you're asking is in the expansion strategy of these vertical AI companies, what's the expandability into adjacent markets?
Well,
Would that be?
that's one, but it's more. That's one aspect. But then it's almost,
Hmm.
so that it's funny. I was thinking the other side of the equation, but it ends up going in both directions, right? One, you have the expansion into being almost more horizontal. Back to our first point. The other
Hmm.
being that, can we see some of these verticals, AI companies, be developed by people outside of the profession, whether from newbies or this, because of now horizontal AI, like you can learn some of that domain expertise coming from a different direction.
Yeah, for sure. So, yeah, when we look at the founders that we're looking to back, a big part of that decision is the founders' founder market fit, and what is their unique insight, and why are they building this company? What do they understand about the market or the problem or the persona or user that nobody else does? Um, Now, does that always have to be the founder CEO? I think the answer is no. I think if you go back and you run the data on successful vertical SaaS companies, you find that more often than not, there is a domain expertise founder on the founding team, and so I think that that is important. But maybe one of my contrarian-ish takes is that the operating experience and the AI native experience and the hyper growth kind of Silicon Valley mindset is equally as important as the domain experience. But I think it's I think they complement each other. I think that you need to have both. And so when we're looking at founder market fit, we're looking at the founding team and trying to understand, is this a dynamic founding team that can get to 100 million in ARR? And do they have the right components of that? And pieces of that is their previous success and their domain expertise and their unique insights. But does that mean that you have to be 20 years from the industry as founder CEO to build one of these vertical AI winners? I think the answer is no.
There's an interesting, actually, I want to pull something that you said that totally tangent, but you used the term ARR. And in the SaaS subscription model, that is a metric that makes sense. What is necessarily the business model for both horizontal and vertical AI, I think might be still a little bit up in the air. And if you have, outcome, if one of them is outcome based, then the metrics don't come over, right? Because you're doing it, it's a very different type of sales.
Yeah, I would say I think there's been a lot of debate around ARR and annual recurring revenue and run rates and what's truly recurring versus reoccurring. I think this was a big debate in the ZERP era as well, when you got into more transactional pricing models like at Snowflake and Twilio, many of the infrastructure layer companies. I think when we look at revenue in terms of AI or vertical AI companies, I don't think that the highest level pricing principles change very much. And so my belief from a pricing and packaging standpoint is that typically the best pricing models generally have two, but more likely three potential levers that you can pull on them. And generally it's some form of good, better, best. And then you have some sort of volume metric and some sort of user-based metric. Now that could be two prongs, or it could be four. But generally speaking, it looks something like that you have good, better, best, and some levers that you can pull. And now maybe those levers aren't API calls anymore, but those levers could be outcomes. You could base on a per agent that's based on the value of a headcount. You could base on a per action, which is more similar to an API call. You could price on a per workflow, but all of those are really essentially at the end of the day, some sort of volume based pricing metric that is tied to value. And then it's really kind of like a sliding scale of how much onus do you want to put on the vendor, the vertical AI company, to take on the outcome versus just doing the action, and how much value do you prescribe to the vendor versus the consumer. And so I think it's still very much up in the air, and I think it's a really interesting and exciting time when it comes to pricing models and what are going to be those value metrics that are used going forward. So yeah, I think there's a lot that's the same, but there's a lot that's changing at the same time.
And how much I agree at fundamental, pricing principles maintain. The question is, what's the right fit for this technology stack? And do you see, are the vertical AI companies the ones who are going to be figuring a lot of this out? Is it where everyone's just kind of stepping back and watching like OpenAI, Anthropic, and kind of seeing what they're doing, and that kind of sets the tone of here's how it's done? Or almost the point of being like horizontal versus vertical is such a different market that they have to be done differently.
Yeah, I don't know that I look at this in particular as horizontal versus vertical, but I look at the general population of software companies, both horizontal and vertical, both emerging and legacy. And I think you'll see winning patterns emerge from those companies. And I think you'll see other companies attached to those patterns and understand what makes the most sense for their context and their industry, and put a pricing model. But I think there's going to be a lot of innovation. There's going to be a lot of testing that goes on in that realm. Yeah, we'll see.
I don't think we spend enough time, or in some of the areas, especially. Well, I think it'd be very interesting, especially in the laggard industries we're talking about. Don't spend enough time on thinking generally about business model innovation, pricing innovation. It's like, hey, I've got the new widget that'll stick in, and great, it's done. And so then it creates an interesting traction issue. I mean, like even like we talk about like legal AI, right? Where legal generally is billed per hour.
Mm-hmm.
Then the AI comes in and says, like, well, you don't have to bill, like, you can do this stuff instantaneously that took hours and hours and hours. Well, that's a little bit at odds with the current business model of how it works. So you see those kind of downstream effects of these kind of changes being made in the laggard industries, as you called them.
I think the business model and the pricing model and the company. Look, I don't think these vertical AI companies, just because they're going after laggard industries or legacy industry, that they're laggard or legacy themselves. And
Oh,
I
not
think
at
they're
all.
taking
Yeah.
the most innovative approaches. And I think they're thinking about the business model and their pricing models in very dynamic and innovative ways. I think what's really interesting for founders these days and investors as well is when you're looking at an industry and you're looking at a problem set. To truly now, I think it makes more sense than ever to then evaluate that opportunity by which business model is the correct fit for it and running TAM analysis by business models. And so if you're running AI enabled services and you're pricing per outcome, you may be able to capture a ton of value. And so I think kind of the popular example these days of a vertical AI company that's outsourced or automated a core workflow is this company called Even Up in the personal defense law firm space that have essentially automated the creation of demand packages that was typically outsourced. And let's say whatever that has an X cost per demand package. And now that used to be done by those entry level workers that you mentioned. And now they're outsourcing and it's done 10 times faster and more accurate and with less headache. And they're able to capture the upside of that versus if you were going into that same legal market with a SaaS offering, maybe you're not able to capture as much value versus if you were going in with a co-pilot offering, or if you were tied to some other value metric, the size of the TAMs could look very different if you're charging $50,000 per outcome versus $500 per seat versus $50 per request or whatever it is. And so it starts to get really interesting as another variable to understand what is the best business model and pricing model to go after this industry and opportunity, because the size of the TAMs could end up looking dramatically different depending on which way you go about it.
Well, given that you're like at, pre-seed and seed, how are you approaching it when companies are coming to you and you're deciding to write checks? How baked do they need to be? Especially as I think as you go into some of these that have not even, that are still kind of frontier, right? I can make up whatever vertical you want. So likely the answer is it takes experimentation. So how are you kind of measuring? Do they have the either the data to back up the approach that they have, or the non-technical chops to be thinking about, should it be one of these 6 different things, and how are we going to answer these questions?
We have a diligence framework and that we go through to kind of look at what industries are a good fit for vertical AI and how disjointed is the data, how important is the data, how important is high accuracy and precision and all of that. But to your point, when you're at the pre-seed and seed, you know that things are going to change. You're going on a long 10, 15, 20-year journey with these founders, and a lot's going to happen over that time frame. And so when we're investing at the pre-seed and seed, we're really investing in people and we're investing in founders. And so I like to joke and somewhat joke and somewhat serious as well that our diligence framework is founders market traction. But at the earliest stage, like really you're diligencing the founder. Now we know the famous saying that when a bad market meets a good founder, the market wins, and regardless, the market wins. And so the founder is the variable that shows how big the company is going to get, and the market shows how big it could get. And so the market is an interesting component when we look at it from a TipTop perspective. We're underwriting and looking at, can this business under a certain degree of confidence, get to 100 million in recurring revenue with healthy profit margins and good gross and net retentions. Um, but one of the things that we're looking for in the early days in that dynamic founder and founding team is, are they pitching a large enough vision that they can get to that 100 million plus run rate? That maybe doesn't need to be what their initial market or their initial wedge or their beachhead that they come into that market with, but do they have a vision for a phase 2 and phase 3 plan that's going to get them there? And maybe it's a little bit fuzzy today, but at least those founders are coming to me with a vision about how they're going to transform or redefine an industry, rather than how they're going to create the new next whiz bang cool AI tool that's going to solve one problem, and has shown me that they've thought deeply about the problem in the industry and the future of how that industry is going to look. And so, yeah, maybe the specifics or specificity of their business model and their plan changes over time. And I think what you find is that the best founders often do pivot and pivot multiple times, and so then it just goes back to the dynamism of the founder and the founding team.
So we were talking about like your underwriting on the top line. When I'm thinking about like the the bottom line, one thing that kind of shocked me in the vertical AI space, just like fundamentally, now this may have been wrong since I don't come out of the software world. I was thinking about lower capital efficient or better capital efficiency, lower costs. And then I remember when Harvey AI, which like is a legal AI, raised their, I think their Series C or D for like 300 million, and a lot of it being GPU time. And I was like, well, hold on, these aren't quite the the margins. These are costing a lot more than I would have thought going in. It's almost not quite foundational AI level of costs where you need to raising like 40 billion at a time, but
Yeah.
still like it wasn't execution funding. I mean, I'm sure there's part of that into it where you think, okay, now we're going to grab this market. It was literally, a technical costs.
Yeah. I think it's interesting. I'm not too up to speed on the specifics of that $300 million round, and what was going to be the use of the funds versus GPUs versus execution and whatnot. I think at a higher level, I would say that um, I think it's still TBD on what the ultimate long-term margin profiles of these vertical AI companies are going to look like. If you're
Or any of
tradition
these AI companies.
or any of the yeah, well, definitely any of the AI, but I'll call vertical AI application layer
Yeah.
companies, that which is my world and my realm. If you look at the last era or the past of SaaS, then typically what was looked at as good is like an 80% gross margin. In the future, now that you have the additional cost of the foundational models, does that look like more like 65% at ultimate terminal velocity of scale? Potentially, do you end up taking potentially a slighter discount on your multiples to take into account for that margin change? Potentially. I think what's probably a larger driver of the size of the rounds and the capital intensity or capital efficiency of the business really depends more on the size and the scope of the opportunity, more than the cost of the foundational models. I think this is an important distinction for founders and VCs to understand, is that some opportunities are better suited to be bootstrapped, capital efficient businesses. Some are uh, more suited for a winner take most. I won't call it growth at all costs, but dynamics that warrants putting together a war chest to be able to fully attack the opportunity. And in Harvey's case in particular, that would be more my assumption, is that they're seeing a very massive, large market, that is a greenfield right now, and they're putting together the chest to go execute and capture that market today. Um, and I think, to that point, that you've probably heard this new concept of seed strapping as well, where founders are just raising a little bit of money, get to profitability, and then preserve optionality. And some VCs, especially some of the later stage, are maybe a little bit nervous, or it gives them a little bit of hang up about this, because, well, what if those companies don't need the Series A or B or D or later, and they're able to get to profitability?
We've been hearing the seed strapping, I think, more and more, but like in maybe the last year or so, like we haven't got enough of a cycle of traditional like periods to getting from C to A to see if that's actually true. And it's like, oh, well, you want to be doing this? I'm like, okay, great. Like, let's see let's see the scale. Let's see. And I'm not like, not saying go for venture at all costs, but it's an interesting question where some of these terms are occurring back to our like definitional things. So these terms are occurring before like reality setting in. Like, oh, well, maybe now you can do this. Like, okay, let's see it.
Let's see it. I think, yeah, the proof will be in the pudding. Um, but I think seed strapping, while a new term, I don't know if it's an entirely new concept. It's more or less what we did at Greenlight Guru. I mean, we raised an initial 300K, then 900K, which is essentially like a $1.2 million pre-seed round over less than a year, and then essentially seed strapped up until a large private equity round 7 years later. Will that become more of the norm going forward? Potentially, where it's taking less than $2 million for these companies to get a product to market and then get to early initial traction, and then have the optionality to understand, like, is this a winner take most market where we need to go get that war chest and dump a bunch of money and really attack the opportunity, or is this something that we can continue to grow at a healthy pace with profitable or efficient growth, and we don't need to go take on a bunch of that dilution. But I don't know that the decision of taking on additional capital or not taking venture, if the calculus of that decision changes as much as it maybe used to. I just don't think founders were as open, or like it was a discussion or in the thought as many founders' heads 10 years ago, is that you had optionality. I think it's maybe um, yeah, just more what's the word, availability bias, that there are options in growing a company these days.
Well, and I was talking to Tim Lewis from Samantha Lewis from Mercury Fund a few weeks ago, and we kind of got into the same kind of question in that. So there's the optionality by the founders, but then you almost take the flip side of it, which is because of all of these, just say broadly, AI tools out there, whether they be from the vertical AI companies that are actually building these things, or the horizontal, that there's a lot of things that are being developed that are great businesses and being able to be done at cheaper rates that you might have before said, this is we're going to put VC money into this, but now you're like, well, this might not be like the term VC backable just changes, because you're like, if you need a certain curve to go along with that, with
Hmm.
the kind of multiple exits, and you're like, well, I'm just going to seed strap and create a valuable company out of that is profitable long term, but that actually may not be what we think to produce the kind of venture backed requirements that are necessary, especially now when we're seeing, and I'm still trying to wrap my head around, like, Andreessen and like Lightspeed, these mega platforms with like 20 billion or some gigantic number, that what has to be flying into them to then be having the check right has to be, we're getting to the point where they have to start underwriting $1 trillion outcomes.
Yeah. And maybe that's what you have to believe. And I think that that's a certain game on the field. And these mega multi-stage funds are playing an interesting and different game than I think the smaller, more boutique specialist funds. And it's an ecosystem where we all play nicely together. But yeah, when you're raising 20 billion, like unicorns and billion-dollar outcomes just aren't going to cut it anymore. They're not going to move the needle on your fund. And so yeah, you're needing these decacorns, if not these $1 trillion companies that they're shooting for. And so um, I think that then comes back to understanding your fund strategy and your fund dynamics, and what's your investing model, and what makes sense. And um, I think when you look at like what what distinguishes a good business from one that's truly venture scalable, well, I think it goes back to what is the underwriting model that the venture firm or the fund that's investing in you is using. What sort of outcome are they shooting for? And so if a $1 billion outcome is no longer venture backed outcome and too small
Oh
for
my
some
God.
of these companies, we're living in a different world. And then maybe the venture asset class is really split into two classes. And you have the mega multi-stage funds that are more the beta on the market, and you have the early stage specialist funds that are still alpha chasing and are more your traditional hands-on, getting in with the founders and helping out and building interesting businesses, and where billion-dollar outcomes still return the funds for them, and that's what they're shooting for. So I think this is also, not to go too far on a tangent, but where TAM analysis
Tangents are fun.
where TAM analysis is tricky, and I think is really important, and goes back to our earlier conversation of trying to understand and do TAM analysis by your business model, and then also TAM and SAM analysis by the initial wedge versus the greater opportunity. So like one of the things that has me excited about vertical, and we'll call it vertical AI, or what I call vertical software 3.0, versus maybe 1 and 2.0, where we were at Greenlight Guru and over the last 10 to 20 years, is that the conventional wisdom is then that vertical SaaS TAMs were too small to support venture-backed outcomes. But the Toast, Procore, Shopify, Service Titans of the world have taught us that that's certainly not the case. And so it makes our job maybe a little bit more difficult as early stage investors to make that distinction between a good business and one that's truly venture backable, and to not be the lazy VCs and say that the TAM is too small, but actually spend enough time with the founder and understand, well, is that their phase one vision? What about the phase two and phase three? And how does that change the calculus on what the potential outcome is? And then again, back to the diligencing of the dynamism of the founder and the founding team.
Yeah, I guess there's always that to be truly disruptive, it has to sound weird. It has to be like, that doesn't make any sense. And so you're always going to put, as the early stage VC, into this realm of, it doesn't on first glimpse sound like it makes sense. So how do I project forward into the kind of the future? And when you're thinking about that kind of those TAM and SAM analysis, like you don't want to fall into like, the Uber Lyft trap of, well, if I just do the number of cabs out there, that's a tiny market. But that's not what actually it creates an entirely new market that we weren't thinking about. Or, I know Netflix has been a little bit like cheeky about this at times of saying like, no, our actual competitor is everything that can be your take on your time, not the other streaming services. That's obviously a bit of branding in there, but it's the kind of idea of like, what are you really changing versus a incremental, here's the new widget, here's the new tech that just, I'm 20% better, so I got to go fight like hell to get it, and I can swap it in, versus we're going to actually change the dynamics of this market completely.
Yeah. And I'll double click on that and give an example of that, and using the Uber and Lyft TAM analysis example. We have a portfolio company here in Austin called Frontiers Market, which is building an AI native SaaS enabled marketplace for cattle ranchers. And if you went into that company doing a traditional TAM SAM analysis, you'd find that only about 2% of cattle sale happen online today. And you would say, well, that's a tiny business. I'm not going to get into online marketplace for cattle sales. But if you looked at it too, well, what if with vertical AI, instead of having to take all your cattle down to the auction house a couple of times a year, load them onto a truck, pull them up onto the scale, run the auction with everybody there, and then everybody negotiate, go home. What if instead you could take a picture of your cow, and you could have a price book with all of their medical records and their history and everything that you need to know about that animal to make a purchase decision, and you could fire that up and run auctions almost in real time at all times, rather than 2 or 3 times a year. And I'm no expert in the cattle ranch space, but my general understanding of how
I
it's
like to eat beef.
yeah, fair enough. Amen to that. But so what is the size of the opportunity if we push cattle sales from 2% online to 20? What happens at 40%, 60%? And now that looks like a massively different market. And if you just went into that opportunity looking at, well, this is a cool app to help you figure out how to weigh your cattle, well, maybe that doesn't look like too interesting of an opportunity. But if you look at it, we're going to change the way that the entire world buys and sells cattle, well, now that starts to look pretty interesting.
And I would assume, not knowing nothing, this is the first time I hear about this company and going, but like you easily begin to look at that, like, are we changing the way we actually buy and sell livestock, like just in
Mm-hmm.
general, right? Like how much a cattle versus sheep. There obviously are differences, but the same basic premise. And if we're completely disrupting and changing like that layer of the market in livestock, well, yeah, that's not 2% of cattle. That's a lot, right? I
Yes,
don't know the TAM,
it's a
but I
trillion,
can
yeah,
imagine
trillion
it's
plus
huge.
market. Yeah,
Yeah.
exactly. Yep. Yeah.
So, but how do you deal with the? You know, it's funny. We a little behind the scenes. Like we move this. You know, we do the scheduling. We move this out a week, and then it ended up being very judicious that we did because so OpenAI hires the CEO of Instacart to be named the CEO of apps, and so my initial thing, if I was, you know, we talk about like where's the horizontal and where's the, you know, the vertical kind of, you know, difference is. But then if I'm thinking of a vertical AI, my initial instinct would be going like that graying zone. And I haven't seen I haven't seen her say much yet so about it, but that graying zone seems to continually moving up. Now, maybe they might be thinking of infrastructure more than apps, but that my sense from seeing what Sam says and different things, that doesn't feel like it. It feels like no, we're going vertical.
Yeah, I don't know. I think there's probably a flavor of that, and I have no insider knowledge, and just kind of looking from the outside looking in. And when you sent the news over to me and took a look at it, um, after looking into it, like I really think that this more mirrors or rhymes with the pattern of when Zuckerberg brought in Sheryl Sandberg in 2008 to focus on building the infrastructure and the operations of the company. And so I think in the press release, Sam had mentioned that she's coming in to run the traditional business functions,
Mm.
and it's going to allow Sam to focus squarely on AGI and the research and safety and everything that's going into advancing the research project. And she's going to come in and run the quote unquote traditional business. And yes, I think they made mention either they are previous that they are moving more into the infrastructure layer. And I think if you're investing there, that is a real risk in the understanding of what is OpenAI going to build versus not. Um, and then, yeah, if you go all the way up to the application layer, I wouldn't be surprised for them to start looking at the TAMs and looking at the greatest opportunities. And I think those greatest opportunities are likely consumer opportunities that you
Mm.
think about. Like ChatGPT is the largest horizontal chatbot app and intelligence in the world today. What other opportunity like Canva and design or image creation? I guess I should go to Canva, but does OpenAI, like if I'm Canva, am I more worried about OpenAI coming into my realm there? But I think they're going to look at the most massive, huge consumer markets and understand where should they build deeper. I think probably again similar in rhymes with how Google changed their search experience around certain industries like travel.
I hadn't gone too deep into what they've done, but if it's to free up Sam to look at, you know, AGI and like how much of it is, I'm sure it's a move into the things we just talked about, but also a response to, you know, Mira at Thinking Machines and Ilya's, you know, SSI, and like you're like, okay,
Mm-hmm,
so
mm-hmm.
you know, she raised a $2 billion seed round, which is just insane, and then you've got SSI being, you know, I think they've raised 10 on 30 or some numbers that start not making like sense anymore, right? And they haven't even like announced beyond that it exists. Really, I'm sure people know more than I do about what's going on there. But so it's funny because it does kind of get back to your Sheryl Sandberg kind of reference of like, okay, grow the company as a company is what it needs to, and here's all our apps, and then you know, then you've got the equivalent of Zuck going off and thinking about, you know, AR and the metaverse and those kind of things that you can pivot the company to.
Yeah, well, I mean, if we go back to 2008, that was the advent of the mobile era, right? And Facebook
Mm.
was having a crisis if they were going to be able to adopt and transition from a desktop platform to a mobile platform. And again, I don't know the specifics of back then, but if I remember properly, I think that was to allow him to focus on that mobile transition,
There
which
you go.
again would rhyme really well with Sam being able to focus on AGI.
I want to pivot to Austin a bit. So literally just put out some data this morning from Carta that
Mm.
I call like the new kind of trinity of Austin, like the three biggest areas. It was like 27%, 26%, and like 20% was SaaS, which we can debate what's in there, hardware, and health. And it's interesting because we've had this long history of, I'd say, enterprise SaaS was Austin. But now it really is, I kind of beat a dead horse for this convergence of atoms, bits, and intelligence. And I bet you that a lot of what we would be calling vertical AI is sitting under that SaaS, bucket.
Mhm.
And so, one, what do you think about Austin as an ecosystem for vertical AI? And then how much does that history of enterprise SaaS really kind of fit into it? Or does it not?
I think it has a huge impact and fits into it extremely well. Um, in general, and to take a step back, like, I guess for your info or the audience info. So I just moved here to Austin, coming up on 2 years here in a month or so, from when this will go live. And so getting antiquated with the town and getting situated and starting to feel more plugged in, and obviously done my research on the history here. So, but not coming in by any 20-year expert by any means, but in
Give it
general,
another year, and then you'll
uh,
have the 20-year expertise. Yeah, you just got
yeah,
you
fair.
got to learn the history.
Yeah, gotta learn the history, which people are good at, and it is helpful to understand the lineage and where we are and what brought us to where we are today. Um, that being said, I think at a higher level, vertical market software winners in general are more likely to pop up around the industries and ecosystems that they exist in than they are in SF. Like on average and in general, a unicorn is much more likely to happen in SF than other markets. But if you look at just vertical SaaS winners are more likely to pop up in tier two. We'll call them other cities, other markets that are closer to the industries that they serve, whether that be construction, med device, pharma, e-commerce, you name it. And so with Austin's rich history in both enterprise SaaS and the key industries like defense and robotics and manufacturing and healthcare, I think it makes it a very likely and key hub with the right ingredients to create the next massive winners of the AI era. And so
It's going to people coming out of
that's
these
got me.
industries going, "This sucks. I need to fix this."
This sucks. I need to fix this. Pair me up with those enterprise SaaS experts that know what growth and scale looks like and know what operating and building really big businesses is. And then take it with the mindset of Austin of growth and what's next and being the future and a catalyst of innovation. And then add maybe sprinkle in a little bit of the earlier talent that's coming out of the universities. And I think you got a pretty good cocktail for some exceptional vertical AI companies here.
A lot of the companies that we're talking about, like with like defense tech and robotics and health, a lot of those are, new and rocket ships on their own. Space.
Yeah,
There you go. Space being another
literally.
one. And so, is there a little bit almost from an Austin vertical AI situation where we might be too early because those companies are not hitting the walls yet that people are getting frustrated with? So many of them are just dealing with entirely new things, or I'm going to take the other option is because so many of them are essentially greenfield and like, how do you
Hmm.
build a humanoid robotic factory that they're like,
Hmm.
I'm just thinking from back to our kind of like skipping the telephone right to the mobile, like, how
Yep.
should I be thinking about this? Right.
Yeah. So TipTop's belief is that vertical AI is going to transform nearly every industry and white collar role in some way, shape, or form. Um, where we see the greatest opportunity are in the more legacy industries that maybe didn't adopt that, to use your now the SaaS 1.0 or 2.0, like supply chain, manufacturing, healthcare, energy, construction, etc. So our belief is that vertical AI is going to transform nearly every industry and every white collar role in some capacity, whether that be new emerging industries like robotics and space, or in more traditional legacy industries that didn't adopt SaaS 1.0 or 2.0, like supply chain and healthcare and manufacturing and energy. Um, And so I think it actually means that there's opportunity abound and all over, whether it's legacy or the emerging industries. The emerging industries are going to have a lot of green field, and the legacy industries, we've kind of seen this flip that we talked about earlier, that some of these more legacy industries like government or legal or manufacturing are actually some of the ones being the early adopters and leading the charge of adopting vertical AI. You think about use cases like computer vision and manufacturing for quality assurance and quality control. You think of like scribe products are really taking off, or ambient
Yeah.
listening products in healthcare, or agents being able to do contract reviews and legal. Like all three of those are prominent use cases that are really taking off in vertical AI right now. And all three are in traditionally laggard legacy industries that are actually kind of the early adopters here. And then if you look at the robotics and the space tech and advanced manufacturing, look, they're already the early adopters, and so they're going to be behind the trend as well. And how do you build a fully autonomous manufacturing plant? Well, probably likely with a lot of vertical AI.
How do you think about, like, from a talent perspective though in Austin? Because look, obviously the concentrate, if you're building a foundational AI model, the concentration of talent in, in the Bay is it's not even second to, like, it's just, that's where it all is. And if you're going to say if I'm going to build a foundational AI company outside of the Bay, your first question is why? What, you better have some unique insight onto that. And so I would think that you have all that talent's there, but it's probably different talent and different skill sets to create kind of the more vertical oriented. Does it look like, so one, does it look like SaaS in terms of the talent? I mean, obviously they're probably using Cursor and different, different tool sets, but is it just good software talent? And then, or is there a unique talent that's needed because this is AI?
I think it looks, smells, walks, talks like good, really good software talent. I think it takes a mindset shift. I think you have to be coming into this of what can I automate? What can I do faster? What can I do better using AI, and take an AI native approach to building your business and implementing AI into every process that you can. And if you're not thinking about that in every role across every traditional department of a software company, then I think you're gonna get left behind. But do the fundamental skill sets change? Probably not. Um, I can think of like one example in the go to market and my background, and um, kind of this new role or new title or idea of what they're calling a go to market engineer, which maybe isn't too different than a growth lead or a growth marketer, in another realm, which in a previous era maybe was called marketing ops. And so maybe how we brand and call these roles, and yes, the roles and responsibilities are changing and how they execute their job, but being a left brain analytical kind of logical marketer, data driven marketer, being called a go to market engineer, now you're just able to do a lot more with less. And so maybe that's a little more technical expertise coming into go to market, but that's not a fundamentally different skill set than what's been needed in previous eras, I'll say.
Well, it's funny you say that, and I'm blanking on the company. This was like yesterday, 2 days ago, where they merged their CTO and people job because of the exact kind of the way that you just said it, which is
Yeah.
fundamentally the first question is: are these new tasks that we need to do? You've seen Shopify kind of put out their note about this. So,
Hmm.
is the
Yep.
first task that we need way to accomplish this? Do we need people? Do we need workflow? Do we need agents? And then when you get past that question, which is, yes, we do need people, what are the kinds of people? So it's a very interesting, as you said, this kind of tech enabled growth market. Like, we're seeing roles just shift around because the idea of, not understanding this technology, it's not possible anymore.
Yeah. I did not see that example, but it doesn't shock me or surprise me. I think in the go-to-market engineer example, the idea that a head of RevOps could potentially be the most likely head, like the CROs of the future that come up through RevOps because they understand the data, the processes, the workflows,
It was Moderna.
is. Moderna. Okay.
Yeah, we
Yeah.
yeah.
That's super interesting. Um, but I can see how they're thinking about it exactly. That just like in products, you have a build by partner decision, and needing more work done. Like you're going to have a similar decision, like human AI outsourced service, the kind of the same one. Um, and that brings up another kind of related topic that you'll have HR for AI rather than AI for HR. Yes, AI is going to help revolutionize and update HR processes, but what's going to be the HR for your AI coworkers, and how are we going to manage the work that they're doing, and are they being productive? Are you getting the value from it? Is it better to deploy a copilot, an agent, a system of agents, a human? Like what is the best route to tackle a certain job to be done? I think that may change in the future. And so yeah, maybe a CTO is better qualified than a people leader to make those decisions. We'll see. But
Yeah,
fun times.
I'm just picturing in my head like there's got to be a Dilbert coming of like the HR for the agent. Like you could, I can. I'm not funny enough to come up with the jokes, but they're definitely they're there for the taking.
And it's just set up right there, just waiting for someone to knock it out of the park.
Yes. So if anyone can come up, please
And
tag me so I can
I
see
don't
it.
have it either.
Well, this has been great, and I do think that the SaaS and that as we go into more hard tech in Austin, I do think that SaaS is going to play a continued role. It'll look different, right? It'll be a very different type of company. And so, I always like to end on the same question: what's next, Austin?
Yeah, it's an amazing question. I think what's next, Austin, is that Austin becomes a global hub for vertical AI winners, with the rich combo of the enterprise SaaS lineage, the critical industries that are based here, the talent from the previous winners, the emerging talent from the universities, and more and more experienced operators and founders moving here for their second act. I think the cocktail's looking pretty good for Austin to be one of the emerging hubs for vertical AI.
I can't wait to see you seeding all of them.
Likewise, I appreciate it, Jason.
Thanks a lot, Nick.
All right, thanks, man.
So what's next, Austin? We're glad you've joined us on this journey. Please subscribe at your favorite podcast catcher, leave us a review, and let your colleagues know about us. This will help us grow the podcast and continue bringing you unique interviews and insights. Thanks again for listening, and see you soon.